Good morning, everybody. It's Wednesday, January 10th, 5:28 a.m. Central Time. Grain markets just a little bit lower this morning. We've got some Brazil news. We've got some Argentina news to start off this morning.
Brazil's largest farm co-op, Coamo, will receive large amounts of soybeans by the end of January. The large volumes are due to the hot weather that is speeding up harvest. The last time Como received such large volumes of soy in January was during the 2018-2019 season. The early harvest has caused soybean port premiums to fall sharply relative to U.S. soybeans. Soybean yields are still average despite the shortened growing season.
So this group seems to think that the yields are average. I don't know if I understand that necessarily. I would imagine that this super early stuff ultimately will probably be below trend. But in any case, Brazil, the tide has turned. I mean, the weather pattern has shifted. There's more rain on the radar this morning. The next 10 days look pretty wet. This is just the next 5 days in terms of rainfall, what's expected, and anything beyond 5 to 7 days, I always kind of take with a grain of salt. But the forecast and the weather pattern in Brazil has shifted. We saw a dry pattern through October, through November. It kind of started to switch in December, and now it looks like a full-blown flip here in January. So they're not going to have a record crop in Brazil, I don't think, but it's going to be a decent crop, and we'll look at some stuff in context with Brazil and Argentina combined in this next story here.
So, Argentine crops continue to receive adequate rainfall. Argentina's soybean and corn crops received ample rainfall during December, according to the Buenos Aires Grain Exchange. Rainfall is expected to continue through January, along with moderate temperatures. Rains are projected to taper off in March, while temperatures are forecast to rise. The Rosario Grain Exchange is forecasting Argentina's soybean and corn crops to reach 50 million tons and 56 million tons, respectively.
I think it's very likely or possible that USDA raises its estimate of the Argentina soybean crop. They've had good weather. They've got it at 48 now. The Rosario Grain Exchange is at 50. So what I did with this chart here this morning is I took the Argentina number up to 50, and I have the Brazil number at 151. So combined, if those are the two numbers, and I think this is pretty close to what the trade is working with right now, you're looking at 201 million metric tons combined. If that is realized, it would eclipse the previous record, which was 2021. It would eclipse that record by 8.2% or 15.3 million metric tons. So despite all of the weather problems that you've heard about in Brazil, the dry start, the move from maybe a crop that could have been in the mid 160s, it's now going to be 151. You're still looking at a monster, Brazil and Argentina combined. Here's the other problem. So we've talked a lot about these, the shift in the weather pattern, the big crops that are expected, generally speaking. Brazil could have been better, of course. Here's the other problem. This is some data that I pulled from Reuters this morning. This is China crush margins using imported soybeans. I wouldn't take this as gospel. This is kind of a broad stroke of what's happening there. Crush margins are deeply negative. So I think that we not only have supply problems with these big crops in Brazil and Argentina, but we've got demand problems also. The world's largest soybean importer is not making money crushing soybeans right now. It doesn't mean they're going to stop. It just means that things may potentially slow down a little bit. So this is like, it's a perfect storm of bad news for the bean market. And I'm not telling you that this means the bean market's going to go lower from here. I think what I'm telling you is that the things I just mentioned, this is why the bean market has fallen apart the last 6 weeks or so. What happens in the future, I don't know. But the situation does not look overly good to me this morning.
So, if you guys have not checked out our premium content, you need to do so. Joe, can you tell me about the video you put together with Chris yesterday?
Chris Barron was on yesterday. Always excellent stuff. He did an update on 2024 corn and soybean budgets, had some really good data. Chris takes like an aggregate of his customer base, which are farmers across the Corn Belt, and shows us the numbers. What does the cost of production look like? Which items are you seeing increases, decreases as it relates to production costs? What are some things to pay attention to as it relates to your farming operation this year? This is some of my favorite stuff. This is like down into the nitty gritty when it comes to grain marketing and your farming operation. If you guys want to see the premium stuff, go to standardgrain.com, sign up this morning. I'll send you over a copy of this morning's email, which includes that video as well as the 6 most recent premium videos, in addition to a whole bunch of other stuff. Remember, guys, this is the best way to support what we're doing here. The premium subs are the only way that we're able to wake up and do the podcast and YouTube every morning. $50 a month, cancel at any time, no other fee, no other obligation, nobody to try to sell you anything else. Check that deal out this morning, guys.
USDA will release a number of reports here on Friday. Releases slated for January 12th include quarterly grain stocks, monthly crop production in WASDE, and winter wheat seedings. The January report is often a market mover and has been associated with trend changes in the past. The final 2023 U.S. corn and soybean production numbers are included in the report. Traders will watch the U.S. numbers in addition to any changes in the South American production estimates.
Okay, so look at the expectations here. The expectation is that USDA will cut its projection for Brazilian corn production and also for Brazilian soybean production. So when that change inevitably happens on Friday morning, the market will not be surprised by it. If there's going to be a surprising market moving event, my opinion as of right now is that it is not going to be in the South American production numbers. Where is it going to be? It might be right here. 2023 U.S. corn and soybean production. The trade expects essentially no change to the yields and essentially no changes to the acreage numbers. In USDA in the past, in this January report, they've changed those numbers around more often than not. You'll see some sort of adjustment, and in some years, it's a substantial adjustment. So I think that if there's going to be a surprise, it's going to be something on the U.S. front that we just don't see coming. That's why it's a surprise, right? If they come down with the Brazilian soybean number, that's not a surprise. So I think it could be there. I think it could be in the grain stocks potentially. If there is a surprise, I just don't see it coming in the South American production numbers. I think all that stuff is kind of penciled in already.
Ukraine, the G7 countries, and a small group of global South countries met in secret back in December. Discussions during the meeting centered around Ukraine's so-called peace formula and guidelines for future interactions with Russia. No major progress was made at the meeting. Notably, China, Brazil, and the United Arab Emirates did not attend the meeting, and Russia was not invited. Allied efforts have faltered here in recent months. More than $100 billion in aid for Ukraine from the US and EU has not been able to gain approval in Brussels and Washington.
This group is going to have another meeting in Switzerland next week ahead of the World Economic Forum, everybody's favorite group. What did they say? Putin commented on this. Not on this, but he's expressed willingness to end the conflict, but on their terms. And he says that, their terms, Putin's terms, this is how he said it. He wants denazification, demilitarization, and a neutral status. Demilitarization of Ukraine. So I don't think any of this is going to happen, but peace is always a nice idea. I think we're a long way from that.
A group of UK lawmakers is planning to pressure the US Securities and Exchange Commission to prevent JBS from being listed on the New York Stock Exchange. The lawmakers argue that JBS is involved with deforestation, human rights violations, and seizing land from indigenous people. JBS, the world's largest meat supplier, has been attempting to be listed on the stock exchange for over a decade. According to JBS executives, being listed on the New York Stock Exchange would nearly triple the company's market value to almost $30 billion. It is important to note that the SEC is not responsible for assessing business models or a company's social impact. However, the agency has proposed new rules that would require companies to disclose information about their environmental footprints.
Mackenzie, you know a little bit about the meat packing industry. What do you think about this? I'll tell you my thoughts, but you can tell me first.
I guess I've always been pretty against a lot of the meat industry's antics. However, not for the reasons listed here from the small group of UK lawmakers. If it was me, I would list them.
Okay, so the meat pack, a lot of people will say that the meat packers are evil and they manipulate
Mhm.
prices at the expense of the rancher and people like that, and that's probably true to some extent. But at the same time, the people who don't want to see this are like the crazy European climate
Right.
people with the
Yep.
crazy European climate agendas, and we want no part of that either. So you'd probably like to just see the free market do what it's going to do and
Mhm.
get JBS listed, I guess. I mean, does it mean that they're going to make more money? Yeah, maybe it does. But you don't want. We did that video with Kip Tom about this crazy European climate agenda last week, and it's not anything that we want a part of for any reason. And anybody
Mhm.
that's on that agenda needs to be like pushed out of here. So I mean, there's mixed feelings there. I think about that whole thing. What did cattle do yesterday?
Cattle futures were mixed yesterday. Live cattle futures were 32 cents lower to 82 cents higher. Feeder cattle futures were 40 cents lower to 70 cents higher. Box beef was up on the day. Choice ended the day at 280.16. That was up $1.33. Select ended the day at 262.83. That was up $3.47.
Outside market's pretty quiet this morning. US dollar's about flat. Stocks are flat. Bonds up just a little bit. Crude oil is up 18 cents in the February WTI at 72.42. Reminder, CONAB is out with some production estimates a little bit later this morning. USDA Friday. Have a great day, guys. We'll talk to you on Thursday.